Hello and welcome to my morning note. It's been a summer of love for the investors and the European stock market. There's been a very, very impressive rally in European stocks since early in the summer. But now there have to be some questions about whether that is now running out of steam. We know what the ECB is going to do to boost liquidity, and more doubts are entering in about where exactly the economy of the Eurozone is headed. So are those summer nights, is that sweet summer romance now firmly over? With me now to discuss this is our capital markets editor, Ralph Atkins. Ralph, thanks for coming on. Let's start by taking a look at how the FTSE Euro First 300 has done compared to other major indices around the world. And obviously it's had that very great bounce back, although it's still never actually caught up with the US or the rest.
It's been outperforming since about June, but as you say, it hasn't caught up with the underperformance since the beginning of the year. So that's your summer rally, but we're not quite yet in a position where they've been outperforming the US.
Now, what's your theory for what's triggered that rally at the bottom? Is it Greek election or what?
I think obviously the big mover was Mario Draghi, ECB president's assurance at the end of July that the ECB would do whatever it takes to preserve the euro, and that removed the tail risk, if you like, the risk of the eurozone collapse. And I think that was the trigger for this rally. And I think what I would say is that we've seen that now reaching a high point as focus has shifted back onto growth prospects and worries about global and European growth prospects, and the fact that central banks don't seem to be able to do anything about that.
Right, they can avert banking crises, but they can't actually stimulate growth.
Absolutely, and then the focus then is more on corporate earnings and the outlook for corporate earnings.
Right, now one other question that does arise is that given the whole nature of the Eurozone crisis, how much sense does it to think in terms of a Europe-wide stock market? I mean, I believe the German DAX is actually beating the S&P.
Absolutely, yes, no, absolutely. This is it's a compromise indicator, isn't it? Because of course you have the UK in there as well. And if you looked at the Spanish and Italian indices, of course, they've shot up enormously, but then they had fallen.
You would not have wanted to buy and hold them at the beginning of the year.
No. But if you'd bought them at the beginning of the summer, you would have done very well. So it is a big question whether you regard the European market as a single market.
Okay, now let's take a look at who's been doing the buying. The Japan, that's very startling figure there, is thanks to a low base, but here we have flows into mutual funds over the year. Take us through what's happening here.
Yeah, what we're seeing is quite a steady outflow from European equity funds during the course of the year. What's interesting is you see right at the end there's a bit of a pickup at the beginning of September, suggesting that the ECB action had, when it was announced and formalised at the beginning of September, did encourage a return of funds into European equities, although interestingly a lot of that is US money coming into European equities, suggesting the US investors perhaps have been a bit more upbeat about what the ECB's done than the Europeans themselves.
But it does tend to suggest, doesn't it, that there might be money available there to be reallocated towards Europe.
That's right, unless the Americans have done the trade and moved on.
And does this imply that the rally we've seen is people, presumably primarily hedge funds, covering their shorts rather than any active new money coming into
I think that's the sense. I think in talking to investors, there's a sense that people have been closing down short positions rather than taking a sort of longer term, more positive view on the Eurozone.
So what are the critical drivers at this point? We obviously have a very interesting situation in Spain and in Greece, and then, as you were saying, we can't avoid the fact that even the German economy doesn't look that healthy at the moment. What do you think are the main drivers on whether this rally can keep going through to the end of the year?
Well, I think growth is obviously crucial to that, and we had some very poor German business sentiment indicators already this week. And then depends what happens on Spain and whether there can be some sort of compact, if you like, between the Spanish government and the European authorities to put the ECB's mechanism in place, which would then allow them to buy bonds as necessary to support the Spanish bond market. And I think as long as there's tension and arguments and not a lack of clarity about where the Eurozone's going, and fudging and dithering by politicians, I think that'll unsettle the rally as well.
Okay, Ralph, thank you very much indeed. Well, it looks to me as though we are in much the same situation as we've been many times before over the last few years of crisis. If you have trust in politicians to make the right calls over the next few months, then you probably do want to buy into the European stock market. But that does require quite a lot of confidence in politicians.